Understanding the Capitol Hill dynamics. Mark Meadows is obviously a former congressman. He's obviously one of the former founders of the Freedom Caucus, which is the ultra-conservative fiscal wing of the Republican Party. But in terms of those Republicans right now having an opportunity to really negotiate with Speaker Pelosi, they're the minority party. So as a result of that, they're not really needed in terms of, or rather their voice is not just able to be as loud in those negotiations. However, he does come with him and bring with him expansive legislative experience. And as for Secretary Mnuchin, he's always been seen much more as a middleman as it relates to dealing with the Democrats. He is someone, based upon my reporting, who I can tell you has a working relationship with Speaker Pelosi.
If you speak to anyone from the Wall Street crew, Kevin, they'll tell you the same thing. $1.5 trillion deal, it gets done eventually. Is anyone down in Washington thinking about the prospect of no deal ahead of November?
No. And I think, you know, and I think inside of the Beltway, it's been remarkable to see just how, in the zeitgeist, to use Tom's words,
I'm placing a new order to sell short Japanese yen at 106.091. Orders placed to sell short at 106.091.
Teachers, everyone is really on the same page that some type of more relief. And let's not forget, yes, Republicans are talking significantly less than what Democrats want, but it's still $1 trillion, which before all of this was still a hefty chunk of change.
Kevin, you said that Mark Meadows represents the ultra-fiscal conservative wing of the Republican Party. How does that wing of the Republican Party feel about President Trump's proposal to cut the capital gains tax as well as middle-class tax cuts, given the fact that that would also add to the deficit significantly?
Not good, but I think that they also understand, Lisa, that in terms of where the president is headed right now, he was.
Short position open for Japanese yen at 106.091.
But in terms of, if you look at the estimates, and these senators and lawmakers, I mean, they're reading the same economic reports that you know the Wall Street's reading. And I think if you look at the latest estimates of growth for 2021 and the expectation of a vaccine, they understand that some more stimulus is needed.
Dan Quayle, Mike Pence, really? That's what the reaction was. Are we going to get a really on the VP stakes, Kevin? Really?
We're gonna have to wait and see. I think if there's anything that the Biden campaign wants, it's to have a lot of excitement, to have a lot of enthusiasm, and to be able to contrast their ticket with diversity, with an element of historic glass ceiling breaking, and they want to contrast that with the incumbent candidate. In contrast to that, very early on, I'm told by sources on the president's reelection campaign, they have been looking to define whomever Biden picks. And again, we're still, I joke about it, but we're on full VP watch this week and around the clock.
Kevin's got to sleep in the building. He's not allowed to leave the camera until that headline drops. He can't laugh because he knows it's true. It's Kevin Cirelli down in Washington, D.C. Kevin, it's great to catch up with you, sir. Tom, do we need to come up with a new definition for a fiscal hawk? I mean, I've laughed through that conversation. We're sitting there calling these people fiscal conservatives. No, they've got a $1 trillion deal on the table.
I grew up in the land of Barbara B. Conable. Before he ran the World Bank, John, he was House Ways and Means Committee. And the conservatives and the hawks of another time and place always negotiated, always found a middle ground, and there were some real arguments along the way. This is totally different. This is the detritus of the Tea Party, the House Freedom Committee. This is a completely different tone that centers around my way or the highway.
Tom, I think it's fair to say if fiscal conservatism in 2020 is a $1 trillion bill, then the fiscal hawks lost the argument. If that's what we now call fiscal conservatism, we need to get a little bit real about that. Governor Cuomo yesterday, Tom, handing the drowning man an anchor. That's what he said about the president and what he did over the weekend. Pretty much every single Democratic governor came out and said something similar. And this is the current battle, isn't it? It's the president versus the states.
I can't convey enough, folks, the anecdotal, out in the zeitgeist, the anecdotal evidence we're seeing of a real slowdown. Adam Posen was just positively grim about it, John.
Don't see it in the equity market, up 18 on the S&P 500. We advanced by 5, call it 0.6%. Up next on this program, Diane Swonk of Grant Thornton, the chief economist from New York City. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Risk appetite looking good this morning. Good morning. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. This is Bloomberg Surveillance for our audience worldwide live on Bloomberg TV and radio. Here's your price action this Tuesday morning. For equities, it's 7 straight days of gains on the S&P 500 into Tuesday. Can we make it up 0.6% on the S&P 500? In foreign exchange, the dollar weaker against the bulk of G10, including the euro. Euro-dollar approaching 118 at 117.92. And you'll see this from bonds to treasuries, yields just a little bit higher, up 3 basis points to 0.6%. Risk appetite is good. Compare and contrast that to the economy, Tom. How many times have we looked at that situation where markets are looking okay and the economy is still looking shaky?
Absolutely, and we're seeing it in Great Britain today, and of course across America as well. September will be fascinating. Chicago is not interested in September. Right now they're interested in August 11th. It has been a challenging summer for Chicago, and we are thrilled to bring you their economist. Diane Swank joins us from Grant Thornton, her work at Michigan, and then Diane Swank for years with Bank One as well. Diane, thank you so much for coming on today. It is shocking to have the family I have from Chicago, to have the grandfather that was in that room in the back of the Art Institute, that trading room they've got stuck in the back corner, to see this Chicago in such disarray. Is it just about the slowing and collapsing economy?
Well, there's a lot of issues going on, and it's really devastating to see what's happening to Michigan Avenue. Clearly, people are out of work, they have a lot of time, and also the gangs are warring with each other. There's also the looting coming from the gangs because the drug business has dried up over the border, which is all bad on all sides. So, you know, this is very, very hard. It is to see this devastation to the city is very rough, but, you know, we hope we can make it through it, and this is getting harder and harder.
Diane, the polarization of this is seen in Washington, and a stimulus that is halted was the word I saw today in the national press. What would be your message as the lead economist of Chicago, with great respect to the Federal Reserve of Chicago? Diane, what would be your message to the politicians in Washington?
Well, I think it'd be the same as Charlie Evans, the lead of the Chicago Fed, and that is, this is now life and death. We are talking about a lapse in benefits that is already triggering food insecurity, homelessness, and it's not going to be repaired anytime soon. The governors, both Republican and Democrat, said they cannot do what the president has offered. They need to get back to the table and get a deal done. And every minute that goes by is compounding the losses. You can't, as a business, you can maybe get a loan to defer the fact that you don't have cash coming in the door for a little bit, although many businesses are shutting down. But for a family, especially for households in the Black and Hispanic community, this is just insult to injury. It's leaving people without money at a critical time and leaving them on the streets. We're talking about food insecurity and homelessness, the likes of which we've not seen since the Great Depression.
This, Dan, is the difference between the human approach to economics, which is the disparity beneath the aggregate figures, the headline numbers, and the people that make up those statistics, and a market that is just focused on the top line, progressive, positive improvement over the last several months. Do you think we can maintain the latter given what's happening with the former?
Well, you know, the dissonance is really getting to be deafening between the financial markets, Wall Street and Main Street. And I think one of the things the financial markets aren't taking into account is the compounding effect that this is having. We're talking about an economy where you're shuttering a lot of businesses. At least 500,000 businesses have shut down permanently at this point in time in the U.S. That taking away of dynamism, consolidation in a few small businesses not only undermines the innovation of the U.S. economy, entrepreneurship, but the job-generating ability on the other side. And it's really notable that we've had trouble getting out of even the most mild recession since the 1990s with job generation. Remember, the 1990-91 recovery was called the jobless recovery. Coming out of the Great Recession, a lot of people thought we'd get a big bounce. Instead, we didn't, because we did not do transfers to state and local governments. We've not learned our lessons, and Washington needs to get back to the table if they want to get out of what is now metastasizing into a much more vicious cycle, not just temporary COVID-related losses.
Well, Dan, the administration believes that we can have a V-shaped recovery. I understand that concept is just a channel changer for many people now. They hear it, they turn over. And I'm wondering from your perspective whether we're closer to a W given the direction of travel at the moment.
We're closer to a double dip, which would be a W, although, we're talking about 1 quarter of positives. If we just hold at the June levels on retail sales and consumer spending, then we'll have a very strong third quarter. That's kind of a false narrative because that's really plateauing and not showing any momentum over the summer. We could actually lose some momentum in August and September given the lapse in $18 billion a week that consumers were getting in terms of enhanced unemployment benefits to support spending in the U.S. economy. So as we go into the fourth quarter, when you've got...
Okay, ladies and gentlemen, it's time to play stop on profit for Japanese yen, and it is 106.071. All right, so stop on profit for Japanese yen 106.071. It will give us 200 pounds in profit. Okay.
Economy can reopen, manage the virus, get the economy going. The health of our individual people, our population, really is the driver of the health of the economy.
Diane, there's been a shift in narrative, and you're really speaking to this from this recession can be really short, very deep but short, and we can pull out the other side to this is a typical recession. It's going to be very difficult to get back to a normal or pre-COVID level of unemployment. Right now, Mark Zandi of Moody's saying that the unemployment rate in the U.S. probably closer to 14%. Do you agree? And how long will it take to get back to more normalized levels?
Well, that's a great question, and we've been doing a lot of simulations on this. It's really hard because it's, one, dependent on whether or not Congress will just backfill the hole that we're creating by COVID-related losses, which we need at least a $1.5 trillion just now. That's without stimulus on the other side of this. If we get $1.5 trillion with the delays that we've seen, we won't get back out of this on a level of economic activity until mid-2022, the second quarter of 2022. That's a long time, and it's not the snapback that many had hoped for, and that's with some catch-up in 2021 as we try to get back online, but we're really undermining our ability, our potential to grow on the other side of this. As I've often said, this is like, COVID is the iceberg. For us not to be the Titanic, we need lifeboats with supplies in the water this time around to traverse these much deeper COVID-tainted waters than anyone expected for longer because we did not manage the virus itself.
Yeah, there's an increasingly painful story for people who don't have their jobs, and there's increasing fear among people who do that they'll see their wages cut or their jobs cut. And I'm wondering, Diane, in the United Kingdom, we saw data this morning that showed wage deflation for the first time since records began since 2001. Are we going to see wage deflation in the United States in a meaningful way?
That's a great question. I mean, some of that's because of the people who are employed are actually not employed and being paid part of their income. So that's why we're seeing it. So it's a bit of a statistical residual of the unemployment that's actually in the UK. But I think it's very important to understand that we saw wage cuts at the onset of this crisis. Never see that before. Nominal wage cuts because people thought it was temporary. And what firms did is they cut white-collar wages in order to preserve their jobs, to not lose their people after coming off 3.5% unemployment. What's becoming more clear now is that we'll likely see a repeat of wage cuts and unpaid leaves, which is a wage cut as well. As we go into the fall, we've already seen several firms start to call for that, and that could further suppress wages in a way that we don't usually see in a recession. That whole sticky wage theory gets thrown out in a COVID recession. Yeah. And this is becoming metastasizing. I also think it's important to note that white collar and high wage losses, we always focus on the low wage losses because this is largely low wage, but the high wage percentage losses in employment are now approaching those of the Great Recession.
I mean, Diane, this is just extremely important. As you mentioned, the labor tumult in the country. Every kid in America at gunpoint has to read Upton Sinclair, The Jungle, and you read about the Chicago labor economy of 158 years ago. Are we going back to the jungle, this atomization of our labor economy where we have the haves and a massive have-nots in America that on a real basis can't keep up?
Well, unfortunately, we're already there at 3.5% unemployment. What COVID revealed was the inequalities that existed in the U.S. economy in an extraordinary way, and then exacerbated those inequalities. And the idea that we've got, families that can't feed their children for a week right now in the United States of America because of a health crisis. This is now metastasizing into a humanitarian crisis and taking on a different kind of nature of a self-feeding negative cycle that we don't have to do. The reason it's worthwhile to go through these scenarios, the downside scenarios, is you can see how you could stop it from happening. There are still ways we could mitigate the spread of COVID, especially as we open up colleges and older students are highly contagious. We have to mitigate that going into the fall so that we don't have to keep as much of our economy closed down. We need a nationwide testing effort. We need that testing funding that would be in a national, the trillion plus plan by Congress. Both sides agree on that. I don't understand why we can't move forward on testing when that would be, we're still chasing a moving target in that. So there are ways that we could escape this becoming worse situation, but we need to act today. Really, yesterday, the clock has already run out for too many people. We need to get those lifeboats out there to help the economy. But I think it's really important to note that this is not where we want to go, and we have a choice.
Diane, we're really lucky to have you on the show with us this morning. Thank you. Diane Swan, Grant Thornton, Chief Economist. Lucky to have Lisa back with us as well, Tom. Lisa mentioned the jobs report out of the UK. That 3.9% unemployment statistic is the most artificial number probably in the history of the labour market.
Why is that?
Because what we have in the UK is a furlough programme which has accounted for almost 9 million people, whereby the government has paid up to 80% of their wages, capped at about £2,500 every month. It expires in October. If you are on that programme, you are classified as employed. You won't show up in that statistic. What the UK faces at the back end of this year could be real trouble. If that programme expires, and the Chancellor has basically suggested it will, that is when we start to see those numbers move more aggressively in a way we don't want them to, Tom. And what it emphasises, underlines and highlights is how important the fiscal response has been throughout all of this to support the labour market and support consumption.
I think I've said this 3 times this week. Let's say it again. John, I've never seen where and I don't consider Diane Swank to be political, but John, I've never seen so-called conservative economists so on the same page with so-called liberal economists over the need for stimulus soonest.
Makes it all the more remarkable that we can't strike a deal, Tom, down on Capitol Hill. From New York City this morning, good morning. Up next, Dan Tannenbaum, Oliver Wyman, partner, on what is happening with sanctions. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Joe Biden could name his running mate as early as midweek. Bloomberg's learned the Democratic presidential nominee has finished interviewing all the top candidates. Biden promised in the spring that he would pick a woman to be his vice presidential candidate. Vladimir Putin is claiming victory in the race to develop a coronavirus vaccine. The Russian leader says the country has come out with a vaccine that offers a lasting immunity. Putin says one of his daughters has been inoculated. However, the Russian vaccine was registered before phase 3 trials. Those trials normally last for months and involve thousands of people. President Trump told Americans their retirement accounts are, quote, doing fantastically. New data shows he's mostly right. According to Fidelity Investments, the average 401k balance increased 14% in the second quarter. The average balance is a little more than $104,000. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
What the Chinese don't need is anything really destabilizing between now and January, when they may be dealing with a new president of the United States and have an opportunity to reset these relations.
John Lieber of Eurasia Group there, commenting on the situation between the United States and China, and reading between the lines there, Tom. Was that a John Lieber of Eurasia Group saying, wait to see if President Trump has to leave the White House and former VP Joe Biden walks in?
Well, you'll have to see. I don't know where this is going, John, but right now we've got huge news flow out of China, huge news flow as well out of Europe. You wonder where the sanction debate in Europe is going. We haven't even touched on that this week. Within the Biden-Trump debate, there's the game theory, the game of chicken of what next, and it wraps around sanctions. Daniel Tannenbaum is arguably the best guy in the country on sanctions. He's now at Oliver Wyman, partner and America's anti-financial crime head. Dan, you know the minutia of this up, down, and sideways. When you see that Senator Rubio, Senator Cruz have sanctions, translate what that actually means.
So thanks, Tom. I think it's important to note that Senator Cruz and Senator Rubio have had sanctions levied on them twice in the last month. Yesterday, as a result of their involvement in the Hong Kong debate, but also from the response to last month's sanctions of certain people in Xinjiang province on the alleged Uyghur treatment, they were sanctioned for interfering in China's internal affairs. So I view the steps of sanctioning Marco Rubio and Ted Cruz as a de-escalation sign, because they've already sanctioned them. The sanctions don't actually have a meaning or any sort of definition in China at the moment.
Dan, how close are we to a company, a multinational, needing to choose between maintaining a presence in China or maintaining a presence in the United States?
I think Hong Kong is where you're seeing that line drawn. And for right now, if you look at financial institutions, global banks that operate in Hong Kong, that operate in the U.S., especially with the sanctions levied against Carrie Lam and others in the Hong Kong government on Friday by the U.S., banks have already begun rejecting transactions related to those 11 designated persons. So for the moment, banks are choosing the U.S. over China until China gives them reason not to. And that flies in the face, actually, of the Hong Kong Monetary Authority saying that those sanctions have no legal right to be enforced in Hong Kong. You're seeing global banks ignore that and still follow the U.S.
Well, Dan, what this underlines, right, is the power of the U.S. dollar. And that's the power the United States has right now. Does a financial institution have any choice but to listen to what this administration in the United States has got to say over and above what the Chinese Communist Party would ultimately like?
You know, I think banks are still going to follow the U.S. until China gives them reason not to. There's an argument that could be made that compliance with the U.S. sanctions on Hong Kong, in Hong Kong, would be a violation of the newly passed national security law. So again, the U.S. is the de facto standard that global banks will follow until they have reason not to. And this is very much in line with how the U.S. and EU have faced off with respect to Iran treatment. There's been EU anti-boycott restrictions for years, but they've never been enforced, so banks have followed the U.S.
Well, you've got the sanctions, and then on the other hand, you have the potential ban on U.S. businesses doing business with TikTok and WeChat of Tencent. And I wonder what the bleed-through effect is going to be on U.S. banks, on Wall Street in particular, given the fact that U.S. banks use WeChat in China doing business. They've been expanding in China. This affects the way that they try to have an international presence. How much pushback are you hearing from Wall Street, from some of your clients to some of these proposals?
Yeah, I think there's a lot of hope that some degree of a deal is reached after the president's executive orders late Thursday night. I think that there's two bigger issues that come off the back of the focus on the social media and messaging apps. You know, one, why would foreign businesses want to come and set up their technology companies in the U.S. for fear of potential socialization of what could happen to their businesses and forced divestitures? It also poses a risk to U.S. companies operating in China where the reverse could happen to them. But I do think the market is hopeful that some degree of a détente is reached and these apps will be able to continue to function just as they have been.
Dan, what would be your advice to the president? I mean, it's a game theory. As I said earlier, it is a massive tit-for-tat game of chicken as well. You've been doing this for years. You did it at Treasury. You've been cited by the FBI for your work. What's your advice to the president to break the game of chicken?
I mean, to be flip, it's can we all just get along? But, I mean, how can we find a productive way to negotiate with China? There's no disputing that some of the actions that the Trump administration have taken on China were long overdue. It's just back to the how they're doing this. So I do think if you can go back to the manner with which similar discussions have been held, like the Phase 1 trade deal negotiations, you'd probably have a much more productive outcome, especially since you're seeing China take somewhat more measured responses to some of the actions by the Trump administration.
From where you sit, is China delaying, waiting for a Biden presidency?
No, it's unclear what China is waiting for. I do think, there's a certain unpredictability in how this administration has handled China. And certainly in the last month alone, we've seen a fairly significant escalation of how the U.S. is approaching China. Whether they're waiting the U.S. out or trying to get them back to the table to have more practical and productive discussions is really unclear at this point.
Dan Tannenbaum, great to catch up with you, sir. Joining us from Oliver Wyman on the latest sanctions between the United States and China. The tit-for-tat continues. This Friday, Tom, virtually, the United States and China poring over progress of the Phase 1 trade deal. Given what's happened over the last couple of months, can you believe that that is still intact? That still hasn't broken down?
Exactly. That it hasn't broken down is maybe more accurate. John, we had on the show yesterday or Friday, I can't remember, one of our esteemed guests saying it's over for Hong Kong. I'm mentally not there yet, but certainly that's the mood out there. And I just wonder how consultants like Dan Tannenbaum pick up the pieces for multinationals as they decide what to do forward, not only with Hong Kong, but what to do forward with China.
Whether they want to continue expanding into the mainland. And Lisa, so far, they do. That's been the story. Nothing to stop them right now.
I am very curious to see what comes out of these trade assessments, the Phase 1 trade assessments on Saturday. Really interesting to see how much the economic put really presides as the most important point here. In the past, it has been that the U.S. and China both are prioritizing their economies. President Trump's tactic hasn't seemed to indicate that he's taking a similar approach, John, and that's raising a lot of uncertainty about how this will turn out.
Can you define, Lisa, what progress is when they meet and talk through the weekend? What satisfactory progress actually is for a Phase 1 agreement?
That means that you don't have an escalation coming out of that. I mean, honestly, it's if you have at least conciliatory rhetoric on both sides, that would be some sort of progress, I guess, in coming to some sort of agreement. But I don't know. I mean, President Trump saying that the situation has changed. China trying to take a conciliatory approach to wait it out for the next president.
The reason I ask this, Tom, is because it's pretty clear that the Chinese Communist Party has not reached those targets that they agreed to hit on agricultural purchases.
Yes.
So does the United States sit there and say, we're sticking with the deal? We like the deal. We like the progress?
The other matters are so more serious. I don't even think the trade negotiations are feasible right now. I mean, between Taiwan and Hong Kong, John, it's just been overcome by other events.
I would agree so far. This channel has remained totally insulated from the chaos going on around it. Coming up on this program, we'll catch up with Northwestern Mutual from New York City this morning. Good morning to you all. This is Bloomberg.
manera, me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos.
Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien.
I'm placing a stop on profit. I'm moving further to 106.051. Stop on profit moved to 106.051.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Give you a sense of the real-time action, the 10-year yield tumbling.
Position closed on Japanese yen. Profit £400.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
I've never heard Fed officials basically beg for fiscal policy the way they are now.
Markets can probably continue to grind higher from here as long as we don't have a big negative surprise.
The question is, are we headed towards a cliff?
I think we are certainly in the midst of a slow-moving policy mistake.
Hong Kong is, for all intents and purposes, now part of mainland China.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Welcome to Bloomberg Surveillance. We welcome all of you across this nation on Bloomberg Radio, on Bloomberg Television, as well, international relations and politics. John